Bismillah ar-Rahman ar-Rahim. With you, Dr. Adel Hussien, we will complete our course Social Accounting. Our course title Social Accounting. In the last lecture, we finished chapter 1. Now we will begin chapter 2. Our course consists of 7 chapters. Chapter 1, Nature of Social Accounting. Chapter 2, Measurement of Environmental Accounting. Chapter 3, Accounting for Human Assets. Chapter 4, Accounting for Intellectual Capital. Chapter 5, Accounting for Intangible Assets. Chapter 6, Accounting for Grants and Government Assistance. Chapter 7, Disclosure of Corporate Social Responsibility. We finished chapter 1, Nature of Social Accounting, in the last lecture. Now we will begin chapter 2, Measurement of Environmental Accounting. Chapter 2, Measurement of Social Costs and Benefits. Accounting for social costs. 1. Capital costs relates to property, plant and equipment, fixed assets. There is a type of capital cost related to the social responsibility of the entity, which is related to the purchase of equipment, machinery used to fulfill that responsibility, fixed asset. For example, equipment to reduce the pollution, such as filters. It is considered a capital cost. Purchase the social assets. When we purchase any asset is increased, so we will recognize these assets in the debit side. Credit side will be cash because the company paid cash, so cash is considered an asset and is decreased, so it will be in the credit side. There are two sides for any entry, debit side and credit side. If assets are increased, it will be in the debit side. If assets are decreased, it will be in the credit side. There are some expenses necessary to operate the asset. To make an asset valid to use, these expenses in the first stage, it will be in the debit side and cash in the credit side. So these expenses such insurance, transfer, etc., these expenses will be in the debit side. We pay these expenses for cash, so cash it will be in the credit side. In the second stage, these expenses will be capitalized, will be loading in the assets. So loading the assets with expenses of insurance, transfer, etc. These expenses will make an asset valid to use. Without it, the asset will not be operated. So asset is increased. These expenses will be closed in the asset, so it will be in the credit side. So debit side will be social asset, credit side insurance, transfer, any other expenses relates to an asset. Without these expenses, an asset not valid to use. At the end of the year, depreciation premium shall be made in one of the known or fixed consumption methods. There are many methods to compute depreciation, such as straight line method (SLN), declining balance (DB), double declining balance, and so on. The entry shall be as follows. At the end of the year, again, at the end of the year, premium depreciation of social assets will be in the debit side. Accumulated depreciation of social asset will be in the credit side. So any depreciation will be in the debit side. Accumulated depreciation will be in the credit side. 5. Premium depreciation closed in statement of social costs and benefits as an expense. So we will prepare financial statements at the end of the year. Depreciation will be an expense in the statement of social costs and benefits. So the entry will be, we will debit statement of social costs and benefits and close the premium depreciation of asset in the credit side. Disclosure in financial statements shows the depreciation of social assets in the statement of social costs and benefits as an expense. So in the expenses, premium depreciation of social assets. Revenue may be capital gains, for example. 7. According to balance sheet or our budget, social assets and accumulated depreciation are shown as follows. Assets, there are economic assets and social assets. Any assets should appear in the balance sheet. So social assets less accumulated depreciation. In the right side, liabilities and owner's equity. Another type of costs, the current cost. This type of expenditure is charged to the income of the period in which they were spent, such as contributions to educational and health funds, training programs for disabled workers, ball costs used in waste disposals, wages of supervisors for product safety, etc. These expenses will be charged directly to the income as an expense. The accounting entries for such expenses will be as follows. First, proving the expenses. Expenses will be in the debit side, cash will be in the credit side. So our entry will be donations and educationals, training programs for disabled workers, survey costs used for waste disposals. Credit side is cash. At the end of the year, closing expenses in the statement of social costs and benefits. So the entry will be debit statement of social costs and benefits because our benefits is decreased, credit donations and educational, training programs used for waste disposals. These expenses will be closed in the statement of social costs and benefits, so it will be in the credit side. At the first stage, these expenses will be in the debit side, cash in the credit side. In the second stage, these expenses will be closed in the statement of social costs and benefits, so it will be in the credit side. Now we will take an example to cover two types of costs: current costs and capital costs. Example: on 1/1, Al-Amana Steel Company is constructing a nursery school for children of the worker with 4 $500,000, it is depreciated over 10 years. On 6/1, paid $5,000 donations for educational and health. On 8/1, paid $2,000 training programs. On 10/1, paid $3,000 survey costs used in waste disposal. On 15/1, paid 5,000 wages of observers safety product. Required: prepare journal entries, prepare closing entries, show the impact of on social financial statements. Prepare journal entries, prepare closing entries, show the impact of the above transactions on social financial statements. First, the company purchases social asset, or the company is constructing social asset. In this entry, the assets is increased, so it will be in the debit side. So the debit side will be social asset, nursery school for children of worker. This asset is paid cash, so the credit side will be cash. Social assets, nursery school for the children of worker, debit, credit, cash, 500,000. Second transaction relates to some expenses, current expenses, not capital expenses. Current expenses, date 6/1, donations expenses to cash. Expenses will be in the debit side, cash in the credit side, 5,000. Date 8/1, training program expense will be in the debit side, cash will be in the credit side. Any expenses should be in the debit side and cash in the credit side or accounts payable. If expenses paid cash, cash will be in the credit side. If expenses on accounts payable will be in the credit side. So the entry, training program expenses in the debit side 2,000, cash credit side 2,000. There is another expense, survey costs. Survey costs is a current expense, so it will be firstly in the debit side, and credit side will be cash because this expense is paid cash. So our entry will be survey costs in the debit side, cash credit side. Another expense, wages of observer safety product. This is a current asset, will be firstly in the debit side, and the credit side is cash because cash is an asset and is decreased. The debit side will be wages of observer safety product 5,000, cash credit 5,000. At the end of the year, we should calculate the depreciation of social asset. Depreciation of social assets is calculated according to straight line method. The amount of depreciation equal cost of social asset divided useful life of the asset. So the cost of social asset the cost of social asset equal 500,000 divided 10 years equal 50,000. So the debit side, premium depreciation of social assets, nursery school for the children of worker. Credit side will be accumulated depreciation of social assets. This entry every year we will make the same entry with the same amounts during the useful life of an asset. So every year we make the same entry. At the end of the year, closing expenses and premium depreciation closed in the statement of social costs and benefits. What does it mean? It means any account, firstly in the debit side, should close in the credit side. All of expenses plus premium depreciation firstly appears in the debit side. So when we make closing entries, it should be in the credit side. Debit side will be statement of social costs and benefits because benefits of the entity is decreased, so statement of social costs and benefits will be in the debit side. Credit side will be all of the expenses, premium depreciation of social asset, donation expenses, training expenses, wages expenses, survey expenses or survey costs. Closing entries will be made the last day of the year. The last day of the year. Statement of social costs and benefits. 2. Premium depreciation, donation expenses, training expenses, wages expenses, survey expenses. All of these expenses, firstly, it appears in the debit side. Secondly, at the end of the year, it appears in the credit side. Disclosure in the financial statements shows the depreciation of social assets and other expenses in the statement of social costs and benefits. Disclosure in the financial statements. There is 2 financial statements. Number 1, statement of social costs and benefits. 2, budget or balance sheet. Firstly, statement of social costs and benefits. This statement consists of 2 sources: expenses and revenue. Expenses, all of the expenses in our example will be in the statement of social costs and benefits under expenses. Premium depreciation of social assets, donation expenses, training expenses, wages expenses, survey costs. All of these expenses will appear in the expenses section under statement of social costs and benefits. Another statement: social assets and accumulated depreciation are shown in the budget or balance sheet. Firstly, at the first year, balance sheet consists of assets, liabilities, and owner's equity. Assets, economic assets, social assets. Social assets, equipment for pollution control or any asset less accumulated depreciation. At the first year, premium depreciation equal accumulated depreciation equal 50,000. At the second year, accumulated depreciation will be 100,000 and depreciation expense will be the same amount, 50,000. So the depreciation expense at any year of useful life will be 50,000, but accumulated depreciation is accumulated in the first year 50,000, second year 100,000, third year 150,000, third year 200,000, and so on. So social assets and accumulated depreciation at the second year will be assets, economic assets the same amount, but accumulated depreciation will be 100,000 at the second year. At the third year, the amount of asset will be the same, but accumulated depreciation will be 150,000. At the fourth year, accumulated depreciation will be 200,000, and so on. So at the end of our lecture, you should know, number one, there is a difference between capital cost and current cost. Two, how the company records the two types of costs in the journal. Three, how the company make closing entries for disclosure in the financial statements according to statement of social costs and benefits and budget. So finished this lecture. Thank you for listening. Assalamu alaikum wa rahmatullahi wa barakatuh.